Good afternoon, everybody, and welcome to Live Market Analysis USA edition. We're going to head stateside and find the absolute best trades for US stocks. My name is Carl Capolingua. I'm the market analyst over here at ThinkMarkets, and it is a pleasure to join you. The format today is very simple. Over to you. Find the Q&A window. If you're watching it on Zoom in session, always the best way to do it. There's a window there. Type in your the stocks you'd like me to look at. I'll give you my best technical and fundamental analysis read. And of course, if you're watching on any of the streaming services, YouTube, LinkedIn, Facebook, or Twitter, you can do the same. Now, whilst those requests are rolling in, I can see them rolling in. I'm going to head over here and show you something I think you'll find is very interesting. And this is data I compile on a monthly basis. And obviously, August has just concluded. Here we are in September. And we have the S&P 500 Total Return Index, using this as a proxy for returns on US markets. And it's very important. You do see this data quite often, and you can actually Google it. You can Google S&P 500 monthly returns. So you're going to get a bunch of stuff which is honestly quite useless to you, because it'll be based upon, invariably it's based upon, at least the stuff that you can get access to, is based upon what the index itself is doing. It's useless because stocks pay dividends, and as an investor, your total return is a combination of your capital returns, which is what the index represents, and your dividends, which comes out of the index. Each time a dividend is paid, stock goes ex-dividend, the price of that stock reduces, therefore the price of the index will reduce to reflect that. So it's the total return we want. And then you hear a lot of stuff about, oh, look, since 1950, September's a bad month for the S&P 500. I say, so what? I'm going to say stuff was a bit different back in the 50s compared to right now. Okay, I'm not even going to try and make you imagine what stocks were in the S&P 500 compared to the ones now. I bet you they're just a little bit different. So I don't think you can just go, oh, yeah, September's bad, 1950. I think you kind of have to look at it on more practical timeframes. So here I've got for you, and this you don't see anywhere else, how the S&P 500 total return has performed over various timeframes from 30 years back into the 90s. I could go further back. I just don't think you need to. 20 years, 10 years, and 5 years. And yes, we can confirm that September is a bit lousy. And I say a bit lousy because if you look over 30 years, it's about 0.5%, isn't it? Just reading off there. It's about, close to 1% over 20 years, not getting better. Close over 1%, I'd say. I don't have the exact numbers to hand, but you can just visually read off there on the scale. For 10 years and then over 5 years, it's real bad. So I think we've only had one year in the last 5. 2019, I think, was an up year, but the rest of them have been pretty bad. Last year, we were down 9.9%. That's going to have a big influence on that average. And you can say, well, okay, I'm just going to get the hell out of here in September and I'll come back in October. And that's not necessarily a bad strategy. Then you're probably overlooking the fact that you don't know when in September it's the worst. So it's not a matter of saying, well, I'll buy in October. I think you look at September, you say you want to buy sometime in September, so you're set for October and November, which is typically a very good month. If you look at actually over 5 years, November, I reckon, just edges out July as the best month for the S&P 500, but it is a very good month over all the time frames. In fact, I reckon it's the best if we go out to 20 years and 30 years, and then December typically is an up month as well, although the last 5 years it has been the case. So either the glass is half empty and we're all going to hide under the bed for September, or the glass is half full. We could be coming up to a really good buying opportunity. Just to finish this point, how are we tracking? Is 2023 a typical month? Is 2023 an average month? Because averages kind of don't mean much, do they? It's just what happened over a long period of time. They're backward looking. Doesn't mean it's going to happen this year. And in that average, there's some really good Septembers as well. And we are roughly tracking along. Look at, January was a positive month, February was a negative month, March was a positive month, April was a positive month, May was a bit of a pullback, June, July were positive, August a bit of a pullback. So actually we are tracking pretty much in line with what you would expect based upon those averages. I think that's interesting stuff. Maybe you think that, Carl, that was a complete waste of my time. Just do my stocks, please. We're going to do some of those now. We're going to head over to Perry's requests, and Perry's coming in with CSCO. And let me change the screen before I talk for 10 minutes. without doing so. And this is a great looking chart, one of those, big bellwether technology companies in the USA. If there is going to be an AI revolution, Cisco is going to provide a lot of that infrastructure to send data around the place and to store that data as well. Okay, it's not NVidia, the chips that are going to do the number crunching for it, but it does obviously play a role. And I think that's contributed some part to why this has done well. Hey, it doesn't hurt that the Nasdaq's also had a really good rally, but we're talking about stuff that really is kind of irrelevant, because at the end of the day, the market knows all that stuff and they go out and they buy and sell accordingly, and we get what we got on screen, which is our chart. And for the uninitiated, I know we get new people coming in every week, and I love to have you. Let me just quickly recap my strategy. Look, it is a method. I wouldn't say it's completely systematic. You're going to see there's a little bit of discretion, but it's the tiniest bit of discretion. But I teach you how to do the discretion as well. But we do want to see double green. So long-term uptrend, that's your 244, 133 EMAs. In fact, I've got that around 144, 233 EMAs. And then you've got your 21 and 34 EMAs here. If you're going to use a moving average, it absolutely must be exponential for your price action, because it just speeds up the moving average. So we've got two double greens. Why do we want that? Because, well, we just don't want amber and we don't want pink, because through the traffic light system, you can see you're very effective on Cisco. It's going to be effective on anything you use it on. I promise you that. You can't make promises in this game, of course, because ASIC doesn't like people making promises. But I promise you, my trend ribbons are the bomb, ladies and gentlemen. And you can see here, when they go amber, you don't want to be involved. And certainly when they go pink, you really don't want to be involved. In fact, you could say you could go short at that stage. And we go through the transition the other way, coming back from the pink, we go through amber, and then we go to green. So we're all good there, happy days. And they're drilling down into that trend, because I want that quick visual cue, something I could go, yep, I'm interested in this, or I'm not interested in this. That's why I have the beautiful colors on screen. And then after you've shortlisted all the ones down in using that filter, you're then allowed to do a little bit of drawing on your chart. You shouldn't actually touch your chart until you've narrowed down your list, okay? Because if you draw on everything from the start, and you start at literally Agilent, which is ticker code A, okay, you're not going to get to whatever's the last one, Zillow, I'm guessing. There's too many stocks if you're drawing all over your screen. So don't draw until you've shortlisted them, and those moving averages are a great way, a great filter to shortlist by. There's a method to the madness here. Now, what I like to see is price action where I've got really solid motive faces, so movement obviously in direction of those trends as specified, and very shallow pullbacks. And certainly through here and here we had a bit of a compression here, probably, I'm guessing, it's not what I want to do, probably because I'm guessing there was a little bit of a point of supply to deal with. And there was some stuff through here. And if you're wondering what that is, well, the old points of demand tend to act as points of supply. There's actually a point of supply here. So really, if we draw a line through that zone, it explains perfectly. How many times do I do that? You've got to think one day, Carl's going to go through a whole hour where he goes back, and there just isn't any points of supply there to cause that compression. But not today, ladies and gentlemen, because I have found the perfect one here. Really, look at that. That compression occurred between that old point of demand, which in the future tends to act as a point of supply. Going forward, and the old point of supply in here, which should also act as a point of supply going forward, and just bookended that compression. So we can forgive the price action if it does compress for a very good reason. I think that's a very good reason. And then we get through that supply and off we go to the races. And the price action is really good here. And the final flourish of my methodology is just, can I see more white candles than black candles? Yes, I can. And don't forget, the way you get a white candle is if the close is higher than the open, and basically we're talking about accumulation on the day. And it hasn't all been roses for the broader US market through this period, and that's evidenced down here in this indicator, which is my relative strength comparison, not the relative strength index. The relative strength index is completely useless to you as a technical analysis tool. But Carl, no, it's useless to you, trust me, because all it's doing is stuff that's in the price action anyway. But I'm biased. I love my price action. I love my candles. You can see I don't use any actual oscillators and indicators because they're useless. Just my opinion. Don't shout at me. Don't throw stuff at the screen. You're going to break your computer screen just because of me. No point. But the relative strength comparison compares the performance of the underlying security here versus the big index, which I'm pretty sure I set this at the NASDAQ. We did it live in session one time. So we can see the outperformance. I want to buy stocks that are beating the broader market. And this one is certainly doing that. And the candles look great. And then the final flourish is, do I buy tonight? Which is, well, how does that last candle look? And I want to see a nice high close. Look, that's not the ideal candle, is it, to buy? But because everything else is so darn good, I can't really see any reason not to. In fact, there is a final flourish, and I'm not changing the goalpost here. You all know this. It's kind of just looking back and saying, well, yeah, look, I like everything up to that point, but is there potentially another big point of supply from the past that could influence the current price action, that could cause one of those compressions? And there is. We're actually right at it. So that's interesting. If we get through here, then there isn't anything so sinister up until here. And then after that, we're kind of getting back. Well, that one's a pretty important one, but then we're kind of getting back too far to be bothered. But I'm just going to say maybe that's even the all-time high there from the 2021 bull market. So maybe a little bit of caution there, Perry, but I don't think it's certainly not going to stop me from calling it a hold. I don't say, oh, it's hit the point of supply, we need to sell. That's just silly, because we hit the point of supply last night. Yeah, there's a tiny little bit of supply manifesting itself. What does that mean, manifesting itself? Appearing, working its way into the market. How do I know there's a bit of supply working its way into the market? Look at that little shadow there. See the tiny little shadow, a little bit of supply. A little bit of supply, not much. I'm okay with this. I'm fine. Could I buy this one? Oh, absolutely, I could. Could you wait for a pullback and some better candles? Yeah, you could too. But I think if you don't do this, I think you're just being a bit pedantic, because everything else just looks so good. So I'm going to go plus 1/3 on that one. Thank you, Perry. Now, what I like to do in these sessions, again, for the uninitiated, is head over here to my Thomson Reuters Refinitiv Icon spreadsheet. And this is where I can get all the broker data that Thomson Reuters collates. You can see they've got 44 brokers there. Have a look at that. That's quite amazing. 44 brokers surveyed. And for each broker, they say, hey, Goldman Sachs, what is your revenue estimate for 2024 for NVIDIA? And we just happen to have NVIDIA on screen. It's just what I had before we came on. And then for FY25, and then 26, 27, and what about all this other stuff? Look, give me all your estimates, and then they put all those estimates together, and we can get averages for that. So, for example, the average target for NVIDIA, I know I'm jumping around, I'm going to come back to Cisco in a second, is $620.54, which might surprise a few people. People think, oh, NVIDIA's gone up so much. But yes, the brokers have targets actually higher than where it currently is by as much as 25%. Hey, these aren't my numbers. Don't shoot the messenger. Just say, Carl, you don't know what you're talking about. Hey, I don't know I actually don't know what I'm talking about. This is what the brokers are talking about. 16 strong buys, 32 holds, 32 buys, 3 holds, 1 sell. That is absurd. Who is that one person holding out on NVIDIA? Make of that what you will. I think it's the broking community is quite positive to it. Why are they positive to it? Let's look at the earnings line. Bottom left, top right, until the financial year that ended on January 2023. I don't know why, but we're looking for a massive AI-fueled bounce back to the one that is, most of the way through now, isn't it? January 24, and then great growth from there. In fact, the growth is so great that you're looking at 61%, but that's because of this huge bump here. So I think you kind of maybe just flip that switch to here and just take that huge bump out. I think the more accurate reading for NVIDIA's growth rate is 28%. And that's just, it's discretionary, isn't it? This is what fundamental analysis is. I assure you that Goldman Sachs has a spreadsheet not unlike mine. And so does everyone else, Bank of America, UBS, Deutsche Bank. And this is what fundamental analysts do. They just change their guesses in a spreadsheet, and they come up with a number at the end of the day, which represents the fair value for the company. Now, after making that change, my model says 491.65 is fair value, which means the stock's actually about fair value right now. But we do have to make sure we do have the right PE here. And I've got 25.5, which is the median now of these 3 numbers going forward, because we've excluded that. And I think that's a really good hurdle rate for NVIDIA. If you look at the historical hurdle, it's been so much higher. And therefore, this is such a tough hurdle rate. This is an overly punitive hurdle rate. And I think if you're investing in NVIDIA, you want to kind of have that up your sleeve. So look, I used really an extremely punitive hurdle rate, and I've still got fair value, which means I don't think the brokers are all that wrong. Okay, I mean, we could say, if you're going to use, I'm just using round numbers, if you're going to go to say 30 then you're starting to have some upside. I'm guessing the brokers are around about 32. I think we did this last week. That's about where the brokers are, okay? But I like to use my forward median, which is saying, hey, I don't know anything about anything, so I'm going to go, these are all very smart people, I'm going to use their numbers. Now, the reason why I've got this bit open up the top here is because I wanted to do what we like to do each week. Now, that 4.65 is the risk-free rate, and everybody have a different one, and some of you will argue, no, Carl, that's not how you do it, and you should do it differently. Hey, I just worked out the actual fair value of the company, which is the market price. So that's I'm saying my spreadsheet's pretty darn good, but you don't have to like my spreadsheet. 465, what is the right rate now? Because that's not the right rate. That was the rate last week. So we're going to go back here very quickly, and I know this is all the fundamental listeners are going, oh, Carl, this is the best thing ever. If you start talking about Warren Buffett, I won't be able to just keep control of myself, mate. If you talk about a moat, for the technical analysts, just withhold your rage just for a few more moments. I'll be with you in a second. Okay. For those that love a bit of both, hey, it's like Palestinians hugging Israelis, isn't it? What was I doing? I was going to show you the interest rates. So I like to do the 10 and the 2. I think if you're a typical fund manager, you're investing between minimum 2 years and up to 10 years, right? Is your outlook. So what I like to do is get the rate for the 10-year bond, which is currently, you can see there, 411, let's call it. And then for the 2-year bond, US bond, of course, which is 486. So if I go with my trusty calculator here, and you can't see this, 4.86 plus, what did I say? I can't remember. 411, 4.11 divided by 2, I get 448.5. Hopefully I did that right. Let me double check. 411 plus 486 divided by 2 is 448. Let's go 448. So I'm going to go back here, and what I want you to see is how changes in interest rates change the fair value of a company. So using 465, the fair value based upon my model is 491.65. I go to 448, and we can see there that bang, we've gone up. The valuation's gone up, the fair value's gone up, so we can pay more for NVIDIA shares. And this is hopefully I keep saying interest rates are so important, everybody. It's the price of money. You need to know how the price of money impacts your portfolio, but I can't even imagine a greater way to show you in practical terms than right there just how important interest rates are. Just because I've changed that, you can see now the 25.5 has come up here. You probably couldn't see that because I was obscuring that before, but that's the hurdle rate for NVIDIA. Now, the reason why we came here was to look at Cisco, which I'm going to do right now. I have to do it in caps, otherwise I'll go crazy. There we go. And the problem with the Thomson Reuters server is it's extremely slow because it's got to go off and get literally thousands of data points and send them to me. And it's not my internet connection, because I assure you my internet connection is pretty good here. And we might just have to wait and come back to Cisco, but I've done the hard part and explained to you what it does. Let us keep moving, because I don't want to lose even a second. Just appeared. There we go. We have to go here, and we're going to go here, make sure the end of financial year date is correct. Not as well reviewed here by the brokers. So we've got 21 brokers, still plenty of brokers, and their average target is bang on where it closed last night. That's amazing. 57.38 versus 57.36. We do have 5 buys, 5 strong buys, 6 buys, 16 holds. That's interesting. And then 1 sell, probably the same seller on NVIDIA. EPS line, I want to see bottom left, top right, and it's not. It's actually, it's really flat. It is rising, but it's actually been really flat through here. Is it going to pick up? It is. Not hugely so. We're talking about 4%. Yep, that's in the right place. 4% compound annual growth rate for the look forward period, which is less than the market average. So we saw 28% on NVIDIA, with the average market growth is about 7 or 8%. The average market PE in America is about 20 times. So we're paying only a little bit more than the market's PE for great growth. And that's why the market loves NVIDIA. Now here, we're paying half the market's growth for a bit less than the market's PE, so that's going to give it some forgiveness, but not enough. We're not getting enough PE discount here to warrant me calling this fair value. I just want to double check that's the right PE, so it's the median of those numbers. And again, I'm saying here, I'm not going to pick a hurdle rate. I'm going to use what the brokers are expecting. and it is at the bottom end of that range. So I think it is highly punitive, so this could be a little bit higher, but I don't think that much higher. So between here and here, you wouldn't say there's all that much valuation support for a buy on Cisco, but honestly, I don't care. Some people are going to say, Carl, fundamentals are everything to me, and some people are going to say, Carl, fundamentals are irrelevant to me. Let us keep moving. Perry's next pick. That is, ladies and gentlemen, that is how we do things in live market analysis. I'm here all week. PR. Let's go to, not ASX PR. Let's go here. Permian Resources, energy company. Looks great. I love this chart. This is a magic chart. Short-term trend is up. Wonderful. Long-term trend is up. Also, double wonderful. Let's go here and here. The price action is exemplary. Let me draw. Thank you. I can see, I should know when I see those messages in the corner of my eye, people are screaming at me to change screens, which is fair enough too. And up we go through here, and I cannot fault that price action. It is awesome. I wonder, what am I going to get if I go back this way and see that little compression there? Do I get anything? Actually, I do. Probably get something. So over here, no, that's that compression there. Nailed it. And then what about this? There's a little peak here. I'm not going to say that caused it, and there's a little trough here, but that's starting to get a long ways ago. Price action's great. It's doing all the right things. Candles are amazing. I can't do anything on this but go plus 1/3. I'm in the wrong place. Plus 1/3. Amazing chart. 10 out of 10 for me. Let's very quickly double check this one here, and only if it comes up nice and fast. Let's go PR. I'm going to head back here. We'll just keep moving, and we'll come back to some of these. Cisco's, Perry's third pick, ANF, which is Abercrombie and Fitch, the US clothing retailer. Another, just a wonderful chart. And Perry, I wonder if you watched it after that gap. Was that your eyes should have lit up after that, as mine would have? And we're seeing a little bit of this is so far away. Forget that. Forget I even showed it to you. It's irrelevant. It's too long ago. If you're still harping on about that high from 2014 and you're waiting to sell there, then good luck to you. I don't think it's going to be an issue. This is again the perfect chart. I cannot fault this in any way. And Perry has done it once again. That is a compulsory plus 1/3. Now, when I say compulsory, it's compulsory for me. Everything we do in these presentations is general advice. It means it has not taken into account your personal financial circumstances or particular needs. So before acting upon anything I say today, you should consider whether it's appropriate for you or seek financial advice to confirm that. Let us head over here, Permian, and then we're going to do Abercrombie and Fitch, and that's going to be Deck 22 because we're in the current financial year. And 13 brokers covering their price target quite a bit higher there, 16.15, 13% to the upside. 4 strong buys, 7 buys, 3 holds, no sells. That's a good sign. EPS line is not bottom left, top right, because we had something called a pandemic, and we can certainly forgive a retailer having a bad year during the pandemic. And since then, has bounced back. This year is going to be a bit of a struggle. Obviously rising rates, inflationary, impacts on their cost line, but expected to bounce back pretty well. A bit wobbly through there, interesting, but did you see that 25? But still 12% compound annual growth rate. So better than the markets. Better than market's return, far less than the market's PE, but I suspect that's because we historically are quite low on it, which is interesting. I think this is very conservative. I think this can go higher. Okay, so I think at the very least 14.23, and I'm probably not far away from the brokers if I tinker with this, but I won't because I like my default setting, and I can't see any did I say retail stocks? Energy stocks. It's an energy stock. We're going to go to the retail stock now, but it doesn't matter. COVID was still bad for energy companies as well. And very quickly here on ANF. Now, I'm not going to do this for every stock today, so don't panic if you're a technical analyst. I'm just going to do this for the ones we think we might buy because it makes some people feel better if the fundamentals match the technicals. And we might come back to that one and let it confuse me even more next time when I look at it. Oh, there it is. Just came back. Okay. Let me change this to that. And we've got no compound annual growth rate, which is a bit weird because here we don't have that, and we have that. This is a glitch I found last week, and I wonder why. Maybe because it's that's a negative number, and that is what's going on there. You can't start with a negative number to get a compound annual growth rate. So maybe if I do this, we're going to get a number. Which then, once you take out, because this was negative, see how this is negative? It's just compound annual growth rates. It's not me, it's maths. So that's negative. That's positive. And then I think you want to remove that anyway, which we are doing by only looking at that. So let me guess, the compound annual growth rate here is minus 1%. So it's not one, there's just not enough data here. The quality of the data is not great. There's only 6 brokers covering, and that's contributing to the issue. So I don't think my spreadsheet is going to give you a great evaluation on this, because this is bad, and this is still quite high for how bad this is. And again, there's such a huge variation in the 5-year historical range on PE. What is the right PE? Hey, I'm not saying my spreadsheet's perfect. What it does give you then is the ability to just defer to the brokers, and I think that is good. I mean, who am I to say anyway? And they're 7% upside. Okay, yeah, maybe that helps you, Perry. Maybe it doesn't. Let's head over to here, and we're going to do Perry's fourth and final today, CLS. Which also looks extremely good. I don't think there's anything holding that one down. I'm happy with this. Last candle's fine. Very shallow pullback through there, smashing the market. Short-term trends are very good. Long-term trends are good. And also then the price action pushing out of that consolidation zone, plus 1/3 for me on this one. And let's head back here and type it in and see what we come up with. So very good there, Perry, on those. What we've got coming up, everybody. Daniel's got APP and PR also good. I won't have to do that again. Streamers, let's go to you. You've got ACM coming up from Lawrence, and then a bunch there from Who's All. Get onto yours. Just waiting for these to come in, everyone. Every time I'm about to go away, it pops up. So I might just choose to stay here this time, which means it'll take forever. Oh, gosh. Isn't that Murphy's Law? There you go. Okay, I'm going to keep moving. I'll come back to that one. So let's head over to, as I said, Daniel's got APP. Wonderful chart. Now that we kind of know how my model works, I don't think I have to spend too much time explaining this. It just looks amazing. I'll just quickly have a look to see if there's anything sort of holding this back. I don't think there is. There's nothing really that sinister. Probably here, but geez, that's miles away. So let's go back to here. I mean, you lot, tear in the corner of my eye. I think you're getting it. I mean, plus 1/3 for me on that one. That looks great. And let us go back then and see if we've got the last one coming up. It's still retrieving. Maybe Thomson Reuters is conking out on me. No, it's come back there. We've still got one here. And that's kind of an important one, because without that, I can't get a valuation. So, okay. I'm not sure why it goes slow. That's nothing to do with me, not my technology. Okay, let's keep moving. Daniel, obviously I've done PR. Let's go to the streamers here, and we've got ACM, which I think looks very, very solid. This one is for Lawrence. Oh, wait a second. Lawrence, do you want ACM in Australia? Or, because I can't do it. I can't do it. I know you're saying, I know it's ASX, but look at ACM. I can't. I'll do it on Tuesday. If you want this one, I think it's okay. It's certainly a hold, but you can see the price action's very compressing. I don't know if that's the right grammar, and the candles aren't there yet. So I can go hold, but I certainly couldn't go buy. Let's go to Who's All. Who's All's got, can I polite you? Of course you can politely ask for SNPS, which looks very, very good. Synopsys, let me just flick that out. Blue sky, you're talking my language here. We've got a little bit of supply coming in here, and that's what we're dealing with. And it's just taking us a little bit of time to deal with it. We've got plenty of demand down here. We're a little bit in a range. This is one you'll often hear me label as next good white candle, really. I mean, that's literally all we're waiting for, because we've had our first test here. Here's our point of supply. Obviously, we've had our first test. First test, very important. First test of point of supply. I used to have a rule. I used to have lots of rules. If you knew me from I don't know, about 10 years ago, you might have even purchased a course. I used to do courses. I don't do them anymore. Where in that course, I had a rule that said never buy a first test. Okay. I've since dispensed with that. I'm a little bit more flexible because I've since changed my risk management model to be more flexible, and I think it allows for that. But I mean, this is one example where you don't buy the first test, right? So you wouldn't be buying, you could buy down here because you've got that beautiful candle push off, but you wouldn't be buying you wouldn't be buying this candle, this candle, this candle, because it's only your first test of that point of supply. So the rule said you can only buy second tests and later, okay? Because the first test is more prone to fail, which is what my research suggested at that point. And it's not that my research doesn't suggest it, I've just got a different risk management model which allows me to put some skin in the game and see how it goes. I used to be very much all in and then stepping out, or adding as well, but generally I had to take a bigger position to start off with. I'm off topic here. So you can, the reason for that is the first test, you can imagine there's a big pile of supply up here, Hoozle, and your first test removes some of it, and then it makes it easier in your second and third test to get through. And I think that's what we're seeing here. So literally next good candle, what does a good candle look like? And it's going to look something like this. It doesn't have to close above. It's a bit of a bonus if it does. It just needs to be a nice big white candle or a candle with a large downward pointing shadow. And then that's a plus 1/3 for me. And we'll just write it on the screen so that next time we come back and look at this, we know what we talked about. Now let's go through KLAC is the next one. Very similar chart. And I get sometimes you're in these because they've had great trends, or maybe you've been in them for a while, you're actually making a little bit of money on them, and then they just kind of go sideways for a bit and they frustrate the hell out of you. And that's kind of what this is. But I can see this is rapidly improving. I'm just going to flick back. I just want to double check nothing out there. And I think, it's just a matter of time and a matter of the right candles. We talked about them for the next buy here, and add and move through the top of that trend zone, because otherwise everything else is fine. So I'm happy on this one. To go plus 1/3 on the next high close. So I want to see it close on the high of the day, absolutely convincing me that there is unfulfilled demand in the system. And that's really what a high close is all about, ladies and gentlemen, when you think about it. You see a candle that closes like this, it's telling you about unfulfilled demand in the system. Where did the stock open? It opened at its low. Unfulfilled demand in the system and a complete supply vacuum. So let me type this on screen, what we're talking about there. Unfulfilled demand versus supply side vacuum. Okay, that's what the candle represents. It is the epitome of unfulfilled demand and supply side vacuum. I'm not even going to explain it to you. I'm going to set this for you as homework, is to understand what the hell's going on in that candle. And if I'm going to try and make money in this game and I'm buying, guess what I need there to be in the demand supply environment? I need there to be unfulfilled demand. I need there to be a supply side vacuum, and that's going to facilitate me making money. So next white candle for that one, Hoozle, and then we're going to go to CRWD, which there's your unfulfilled demand there. A little bit of supply at the end, tiny bit, that upper shadow, but otherwise looks fine. We've had some history with this. I don't know what I last said about it. It hasn't been for a while, plus 1/3. You could have taken some off the table by then, to be fair, and just be holding, say, a 2/3 or a 1/3 position. But I think this candle here with the gap is really impressive for me, and certainly that's close within 10% of the true range of the day. And I think close enough to here for me not to have to worry about this as a point of supply. And this is, I have dispensed with this point of supply first test rule. So I can go plus 1/3 on that one. I can't see any reason why you couldn't, assuming, of course, it is the best setup you can find today. And that is always a sensible caveat. So happy with that one, Hoozle. And let's go to your next one, which is CTAS, which is holding very well. I don't know if I'm a buyer because, and the other thing, the other reason why I dispensed with that previous rule is some points of supply are far more significant than others. And this is just, kind of understanding that this is a really important point of supply, because you've got some really nasty black candles there, and that increases my caution. So, I could qualify that rule or improve that old rule I have by, not taking first test of supply when you've got this whopping great big double black candle. It's clear. I know there's no systematic rule. It's not an algorithm. There's some discretion there. Well, what is your big black candles? How big does the black candle need to be, Carl? I'm not going to go into that. I'm far more relaxed with my rules now than I used to be of the mindset I need to program everything. But what it kind of did was meant it didn't take many trades. And in a bull market, you want to have that risk in, and it kind of prevented you. And yes, it increased your strike rate, but I just felt that you went through more periods where you just were in the wrong place at the wrong time, and other stuff was going up. So I've got more flexibility. But I think here, Hoozle, and I think you understand what I'm saying here, this might be one you would treat with a bit more caution into that big point of supply there. But otherwise, if I had it, I would happily hold it. I'm just not going to buy it right now. Let us go back to here and see if this spreadsheet is finished loading, and it hasn't. And that kind of tells me that without doing a restart of this, we might be in a bit of trouble. But I think we've got our fix of fundamentals for the day, haven't we? Let me save. I'm going to save as. I'll put this on desktop so we don't have to. Where's my desktop? Browse. Can you see this? You can see this. There you go. Let's whack it on the desktop. And we'll go _ 1st of September, hey? Let's do that. And we'll save that. And then what I'm going to do is I'm going to close it and see if we can restart it. And maybe it'll start working again. I'll do that in the background. Let's go to your next request, which is I'm going to head over here to the Zoom session, and it's going to be Craig with Disney, another big blue chip company. Try and find the damn thing on my desktop now. Let's go to Disney. So DIS. All sorts of crazy things are happening here. You can't see. Let me put that away. DIS. Oh, wow. I did not expect to see that chart, Craig. As a short. Craig's saying as a short. Yes, because how do you find shorts? We've just talked about how you find good longs. How you find shorts is do the exact opposite of the longs. It makes sense that instead of double greens, we need to see double reds or double pinks here. We need to see not high peaks and high troughs. We need to see lower peaks and lowest troughs. We need to see predominantly black candles. We need to see the stock underperforming against the benchmark index, and this has got it in spades. So this for me, and the methodology is the same, is just simply to go minus 1/3. Now, you might say, okay, Carl, you just wasted, 46 seconds of my time. I know you're really excited about this, but I'm not going to short anything because I don't do shorts, Carl. I don't know how. Well, it's not that hard. All you need to do is head over to here, to your ThinkMarkets platform, and use something called a contract for difference, which allows you to short stuff. That's really all you need to know, is that contracts for difference allow you to short stuff. Because if you're trying to do it in real life, you need to go borrow Disney stock from somebody who has it. Now, who has it, right? And there's some complications there. You can do it, it's not impossible. But the contract for difference takes out all the problems of ownership, and it just settles the difference in a trade. I get in here, I get out there, I did this many shares, and that's my profit and loss. And that's why we don't have to worry about borrowing shares when we're going short Disney. So what I would do here, and this is really important, is the buy button needs to change. So that little tick there needs to go into this box. Absolutely crucial. Because if you set this trade up and then go buy, you just went long Disney, and that's not what you want to do. So we go sell there. Let's click the stop loss on. Let's grab the slider like we do on Thursdays, and let's put it at a point where we talked about yesterday, didn't we, in the macro session, that a good place to set your stop loss is below a point of demand. If you're going long, below a point of demand, because you want the price of the security to bounce off that demand, to find that excess demand, bounce up, and not hit your stop loss. That's kind of the whole point of a stop loss, right? Doesn't mean it's not going to hit it, because you can get through the demand. That anything's possible. Shorts, we're going to change our psychology. Our stops aren't going below our entry price. They're going above our entry price. It's stop loss. You lose money on a short when the price goes up. You make money when the price goes down. And you have to understand this. If you're going to buy the first 4 stocks that Perry gave us, like if your strategy every week is just to buy stocks that Perry gives us, which is not a bad strategy, you kind of have to have something on the other side to hedge out that exposure, because stuff don't go up all the time. I don't know if you noticed. And we're heading into September, everybody. So maybe you might just want to say, oh, look, I'm going to learn one new thing today, and it's how to do this. So we need to get our stop above points of supply now, okay? Old points of supply or old points of demand that we've broken through. So here's your three. Look at this. 1, 2, 3 points of demand, right? Now, those old points of demand should act as a point of supply, and this big black candle here, and it's red on your screen, but it's going to be black in real life. In real life for a Miami broker, I only use black and white. Never use green and, don't use green and red or blue or whatever. Hate them. Japanese candlesticks were developed by Monohisa Homma back in the, 1700s. He didn't have colourful computer screens like this. He only had those dot matrix printers back then, right? And they were all black and white. Black and white is the true representation of Japanese candlesticks. Jokes aside, it's about yin and yang. Literally, that's what Homma said. It's about the balance between demand and supply in the market. That's why I use them. The black and the white, the yin and the yang. For me, as a traditionalist, I only use black and white candles. What was I saying? This big black candle here, you want to get above that because that is the epitome of supply. That is unfulfilled supply and a demand vacuum. 86.77, I'm going to go 86.77. No, I'm going to go 83. Now you can see if I did 0.1 of a share, I can do fractional shares. This is how good this platform is. I can do fractional shares. If I don't want to spend $450 for NVIDIA, I can buy 0.1 of a share of NVIDIA. How good's that? So look, tick that up to whatever you're prepared to risk. I don't know what it is. Maybe it's 30 shares. I like to do multiples of 3 so I can exit in thirds if I need to. Okay, let's say you're happy to risk $145 on the trade. You decide what you're going to risk, and then we would click confirm sell. Now I can't do that now because nothing's going to happen because the market's closed. Okay, what I could do, I could set up not a market order but a limit order, and then I would have to put in a sell limit at a price that is, you can go literally 83.70, and that will work. You can't go less than 83.69 for obvious reasons. If you didn't understand that, catch the recording and replay it many, many times. Actually, I'll put this in. Let's put this in tonight, and then we can come back and we can check it down here, and it will say, well, it actually still says trading is closed. I didn't know that was going to happen. That's frustrating, Nick, but we should change that because why can't you set up your orders now? It's a limit order. Anyway, I will hassle ThinkMarkets to maybe see if we can amend that, because wouldn't it be great if you could set up your orders now and then forget it? You don't have to stay up tonight and set everything up in a big panic. Craig, I'm so glad you gave me that. I think that is just such a sensible way of thinking about the markets right now. And why not have a mix of longs and shorts? And let's start talking about them in these sessions. We only talk about longs here. Let us go to Damien. No, I better go to the chat room. Steve is laughing about something. I'm not sure. Maybe I said something funny. Let's go to Chris. Chris has got NCR. How are we going for time? Awful as usual. Great. I don't have to spend a lot of time talking about these now. Do you want me to tell you about the short-term and long-term trends? Do you want me to tell you about the price action and all that sort of stuff? No, I don't think we need to. I think we can just say, look, I can't see any reason why you couldn't go plus 1/3 on that. So happy to add risk for you there, Chris, on that one. SPRT, I would be looking to short that one, but that's not what we want here. SPRT, which is SRPT, sorry, SRPT. Yeah, we've got some problems here. Not as good as any of the others. Not quite a turnaround play, really, that I'm interested in. I can see, it's trying to turn the corner here. Not for me. Look, I think it can go up, but it's just not what I want to see, to be honest. Not the worst. I'm not going to, me personally, I'm not going to add risk. And I think, you know my methodology by now. You kind of maybe putting some of these in sometimes to say, well, would Carl put his money on it? Not for me. I'm not saying it can't go up. I'm not saying it can't be the best one ever. We have talked about that one already, Chris. So it's great to see people following, playing along at home, coming to the same conclusions. If you're doing that, then I'm doing something right as your teacher. I think this one looks very good. I could easily go plus 1/3 on this. There's a little bit of a supply point here, and I don't like the candles that came after that, but I think it's all pretty minor in the whole scheme of things. So I'm happy with this, and I love the fact that it has done really well off that short-term trend zone. Yes, it's holding that very well. I might just cast my eye out here, and we have looked at this in the past. You can see if I bring that down. Oh, ships. Sorry, you were telling me to change the screen. There we go. 1,000 million times. Bloody hell. Okay, where did I lose you? I lost you at SRPT, I think. Sorry. I think Nick's on a call somewhere. SRPT, not for me. Not for me. I think it can go up maybe to the 130s, but I think it's just I'm going to put that one in the too hard basket. NCR, which I think is maybe you didn't see that one either. That's I just think it's a great setup. Plus 130, no complaints from me at all. And then I went to CNX, and this one here, I'm actually, look, it could have had a slightly better close, and that would be the only thing. Look, given that black candle there, I'm going to say next white candle, next high close, unfulfilled demand, supply vacuum candle, then I'm going to go, and I'm just going to say I was going to drag that down. There's your point of supply up here. I'm not sure if you're aware of that one, Chris, but it can come into the calculations. It's a pretty major point of supply, and it's not that old either. Okay, but I think it looks very good. You've got the makings of an excellent setup there. If I have time for all four, I've always got time for you, Chris. Nick asking about stop losses. I'll let Nick deal with that one. So I'm trying to get to the end of this. Trying to find questions here. There's lots of chat here, lots of chat. People telling me to change screens. Thank you for doing that. And I would really, honestly do appreciate that. I do get carried away here sometimes. Hopefully my enthusiasm for these sessions comes through and is appreciated. Now, who is this just spamming me here? Because I wish you would stop. I don't know what this rubbish is here. This is coming from Barry. Barry, what are you doing that for, mate? Because that's just making it hard for me to get to the next one. Damien has got, let's go to Damien, Alibaba, which is not that one, it's that one. We have had some on this, and I think we were kind of scaling out of this. Damien, having said that, look at that, it's popped back up. I don't think it's something that if you did scale out of it, you're going, geez, I wish I didn't scale out of it. I think you're not regretting it much. So if you wanted to jump back in, you could, but I can't see why you would, because it's not doing the stuff I want it to do. And I totally concede that tomorrow you may get a candle that looks literally like this. I don't know. I can't say. Or it might trend higher from here and this might have been the perfect place to get in if you look back 6 months. I don't know. All I can say is the trends speak for themselves. The price action speaks for itself. It doesn't speak of unfulfilled demand and a supply side vacuum. And we want to find that, not just on a candle, but we want to find that about thank you, Barry. I appreciate that. Barry saying he was just trying to catch my attention because I did mention earlier on that maybe this more productive way of doing it. I need Barry to maybe come in with Nick and shout at me. I'm gonna keep moving there, Damien, with all due respect on that one. BR. I heard, what the hell is this? Bellring Brands, never heard of it, don't know what they do, don't care. Hey, Carl, is it important? Is it important to know what a company does? Is it important to know the company's fundamentals before you invest? Should that company have a moat, Carl? This is really what I'm asking. Should it have a moat? No, it doesn't need to have a moat to make money. It might make you sleep better at night. I don't know. I'm happy with this one. No complaints. This is a great chart. There's nothing here. There's nothing in that to tell me that I shouldn't buy it. Why? Because it is showing me unfulfilled demand, and it's just showing me supply side vacuum. That unfulfilled demand is coming from cash that feels that they're going to earn a great return here, and that's why they're getting in, because they've got the choice of everything else out there, stuff even that has a moat. All right, and the supply is saying I don't want to sell it. Why? Because I like the moat. Maybe. I heard on up here. Over there is my TV. It sits on the top of my bookshelf, and it's always got the media going. And it's not necessarily the one you think of. I've got various media outlets going, but I did see in an interview with a value investor. This value investor actually met Warren Buffett, and he said, of course, rule number one is don't lose money. Rule number two, see rule number one. You know what? If your focus is not to lose money, you're going to lose a pile of it. I say lose money, lose it frequently. Don't get stressed out about it. Move on so you can make some money. But there are different investors out there and different opinions of that. Well, that's what makes a market. It's all good. Neil, yes, throwing stuff at the screen. Yes, Neil is shouting at me because I was doing fundamentals. Sorry, Neil. Marco, hi, Carl. All the indicators mentioned included EMAs. Yes, they are available on the ThinkMarkets platform. It won't do the colors, but you can put them on there. And you still get the same stuff. It just won't have the colors. I program the colors in. What's the code for it, Carl? I'm not going to tell you. I'm going to keep something to myself. I'll give you everything else for free. Rapam, CMPR. Hope you don't mind. Oh, it was looking great. It's got some problems. Trend has changed, Rupam. Hopefully you followed this through. This is, you kind of have to keep going. I know, look here, I totally agree. Look great. No questions asked. And then it changed. So I don't think we've got a full risk position on this, but I still think you've got some skin in the game. Not everything's going to work out. And you could say, I'm going to hold on this for 10 years until it eventually goes back up. That's fine. I can't tell you what to do. You got to do you. But my model says that on the close beneath that point there, I'm going to take a little bit of precaution and go minus 1/3 of my existing position. Okay, so if I built up, 2/3, let's say I went plus 3 shares and plus 3 shares, so I had 6 shares, I'd sell 2 shares here. That's what I would do. It didn't give me another reason with either a really bad candle or another break of a point of demand to sell another 2 shares. So I would have 4 shares remaining on this. Okay. Now last night's candle is not good. Not good at all. I don't like it, but it's not enough for me to panic out. If we do see some supply in here, like tonight's candle is another black candle, closes on the low. So that unfulfilled supply, demand vacuum, think about it. The problem for me is these POSs are building, they're getting lower. And the old point, look, that's your luck sometimes, isn't it? I know it's frustrating. This one for Marco is, I bet you looked at this, look at this, light green zone, trampoline. As soon as you got in, Marco, it stopped. The problem is it may stop going from a trampoline into an inverted trampoline and push the price down. So if we do see more candles here, then I'm going to take the precaution of going minus 1/3. And it might be the case then, I'm not saying we will get the candle there, but your final 1/3 goes out through here. Okay. And this is the thing. I mean, if you don't have a plan, a methodology for getting out, then the risk is you hang on forever to something that just keeps going down. The other risk is if you do get out, it goes back up again, but that's why we can always add back in. And what I'm saying is going to appeal to some people and it's going to just put other people off. Hey, there's a button there. You can stop listening if you want to. I know it's frustrating, Marco. I get it. I know. I empathize with you. Like everything was working on this trade until I got in and then everything flipped over. Welcome to trading. CMPR, how are we going? I just did that one. That's how good I am. I've just done it. That was Rupam. Sorry, not Marco. UPWK. I think this looks good. This is plus 1/3 previously. It's holding well. This is a turnaround play. First one we've seen actually, I think really in this session where you've had that big. What is a turnaround play? Okay, so we've got the big pink zone here, dark pink zone. We hit it, as I've shown you here, it's pushing prices down. Then we pop above it, big gap, great white candle. I want to buy this. I see that white candle, I just want to get in straight away. I don't want to ask too many questions. And then we go from the old point of the dynamic zone here, this dynamic zone, it's moving, the dynamic supply, the dynamic excess supply, the dynamic resistance, for want of a better way of putting it, is now becoming dynamic demand through here. And that's telling me the leopard is changing its spots. And I'm happy to add risk. I think here is another plus 1/3. Okay. And I know it's going to seem weird that I'd go, well, here for me, that's a plus 1/3. Oh, but color went down. Yep, I can't see the future. I'm just waiting to add more risk on this. And the next white candle in and close to this high would be the next one. I just want to add risk to this at this stage. Now, I've got to respect the fact that we could print lower, and in which case I may have to do the other side. I don't know the future. I can't say. But something like that would start pushing me out of it. Something with a nice white candle close would actually... Anyway, let's keep going here. Would push me into it. And this is the way my model works is I don't, the price action guides me. I don't say, I have to do this, I have to do that. It's just, well, what does the price action imply? What do I need to do? So I'm a happy holder on that in the meantime for you, Rupam. Okay, Kirsty's got USLM, which last time we looked at it, we said plus 1/3, and don't worry, it's going to disappear. But I would have said something like, I don't know what's going to happen next. It could put in a big black candle. I wouldn't know. All I can say is that the balance of probability suggests it's going to go up. It gave you a little bit of nervous times here, but never gave you the lower peaks and troughs. A little bit here, and certainly here, maybe could have got you out of a third, probably here. So if you bought, let's say you bought 3 shares here, you might have sold one of those shares. I feel you would have sold one of those shares here. So -1 share. I don't think you really had much in it size of the candles to really concern you before that. And then I reckon you've actually got to probably added that one share back here. Let's just keep the number simple. It's plus 1/3 of your typical risk, but let's say plus one share back in to give you your position. And I still looks fine. Last couple of candles aren't ideal. No way of sugarcoating that. But I'm happy to hold it here. Am I going to buy it tonight? No, I'm not going to buy it tonight. But I think you can continue holding a full risk position on this one. Okay. Let us do Kirsty's next one, which is OPEN. Again, it was looking great. And then here's probably earnings. Those big gaps tend to be earnings. And for me, this is a minus 2/3 here, really. I mean, you've got the big gap. You've got the black candle low close. I mean, you could dust the whole lot really there quite happily. And then probably getting out somewhere down here even on the break through that trough. So you would have been all out. And now it's going back up again. Well, welcome to trading, minus 1/3. So for me, I can't see any reason to get back into it. There's just not enough price action here. So we're not seeing yet stuff like this, okay, to allow me to say that long-term trend zone is once again supporting price now. So it's a short-term trend zone, short-term trend's turning up. There's not enough in there to me at risk. So what I would say to this is that you now have zero risk position on this. Okay, that's where I would be. Now, if you held through anything we've talked about in the past, that's your business. I can go hold, but I certainly would want to see it come back beneath that $3 level, because then it's looking extremely poor on the technicals. SBR, not looking so good there. I wonder if Michael, are you asking about Aussie stocks perhaps? Because I can't see why we'd be buying that one. Let me have a look at your other one. Might make more sense. And there's no KSN. So I'm guessing you're asking me about Aussie stocks. And Michael, please bring those back on Tuesday and I'll do them for you then. But today is only about US shares. From a different Michael. Hey, Carl. Do you keep adding 1/3 even if you have a full risk position? Yes, I do. Yeah, absolutely. Why not? And you can have a limit. I used to have 4 times full risk position as a limit. Now I kind of base it on how I feel. I know you don't want to hear how I feel, but I used to be an algorithm. Now I'm more just practical. But you can use that model if you like. 4 times a full risk position as is where you top out. And some of you, if you have, some of you may even have my old trading plan, and that will be in there. I know William often attends these, and he has a copy of those. If you don't believe me, I reckon I could probably make a bit of money by selling that trading plan, because it is pretty darn good. NVDA, which we've obviously done the fundamentals, but we need to do the chart. You're quite correct, Rupam. I think it looks fine. I can't see any reason to own it. I think we had here on this candle was a minus 1/3. And we said if we got another big black candle and we didn't get it, we would go another minus 1/3. But this is still an area where I'd be focused on. So up to this point, I think you've got 2/3 remaining. Nothing's changed. There's your next minus 1/3. You might get another big black candle like this, which might have been the earnings day. In fact, I'm pretty sure it was. But if you get another black candle like that, you might then go another minus 1/3, and then that will be your final. If it doesn't, it just sort of drifts down. That's your minus 1/3, and then you'd have maybe under here or under here as your final third. But otherwise, clearly for me, this is 2/3 of a full risk position remaining on NVIDIA. Okay, still happy with that one. Let us go over here, and I must do these for my Twitter followers. JBDT31, sorry, I forgot your name. I know you told it to me. Salesforce, I think this did have earnings. Something happened last night. It was on. I heard it chirping away on my TV this morning. Not a great gap. I mean, look, obviously, so that's a silly thing to say. The gap is good, but the candle is bad. So it's not one of those, gap up, big white candle, compulsory buy. I think it's fine. But yeah, you might get a little bit more of a pullback to fill some of that gap and then go again. But if I had it, I would 100% hold it. I'm just not going to buy it based upon that candle tonight. I think that's pretty clear. CDLX is very good. No problems at all with this one. JBDT31. Happy holder. This is, for me, this looks like the most wonderful turnaround play based upon this candle here. This is the perfect turnaround play, the perfect entry. Love it. and that for me would be very much plus 1/3. Last night's candle didn't turn out as well as I would have liked, so I wouldn't be going another third based upon tonight's candle, but all I'm doing here is just looking for further excuses to continue to add risk, because I really, really like this turnaround setup. And I like to have a mix. Like I said, I like to have some shorts, I like to have some longs, but within my longs and within my shorts, I like to have a mix of those continuation setups. We've seen, the bottom left, top right for longs, top left, bottom right for shorts. That was Disney, but also those turnaround plays. So it's very important for your shorts as well, right? That you don't just go Disney. Well, I know we're getting way off topic here, but you find something like this, right? That you find something that's doing this. So this is your turnaround setup. It's just the opposite. I've taught you how to do this. You already know this. You might not think you know how to do this. You do know how to do this. Just do the opposite of my turnaround setup. But it's here. You want to find a mix of setups that look like this, and then a mix of setups that looks like that. Okay, don't do all of one or all of the other. You want that balance. I won't explain why. There's a reason why, but it would take me another hour to explain it to you. Okay, I've got one more for Adonis, YETI. Oh, this looks good. There you go. Another wonderful, wonderful, wonderful turnaround play. I think this looks great. This for me here is plus 1/3. We've got so many great looking charts tonight to consider. That looks wonderful, Adonis. You have absolutely nailed that one for a turnaround play. Plus 1/3 for me. A little bit of a point of supply there. I'm not too fussed about it. I think this looks amazing. So happy with that one, Adonis. Thank you for bringing it to my attention. Let us go. I'm pretty close to finishing here. I've got to do VRT. Did I do VRT? Maybe I did. Looks great. If I didn't do it, it looks amazing. Could I add a third on that? Yeah, look, the candles are getting a bit tight and, into $40, maybe $40. I reckon it's the first time it's been there. It is. It's a bit of a round number. Look, I'm going to just pass on that one. I reckon we've seen better setups that are increasing the momentum with the candles. This one's kind of decreasing. It's a bit of a ways away from the light green zone. If you've got it, I could hold it. Absolutely. I can't see any reason to sell it or to reduce your risk. But maybe I'm just going to refrain from buying that, because remember, I keep saying, if it's your best setup on the day, and this is very good, don't get me wrong. But I think maybe we've seen some other ones where the candles are just bigger and better, if you get what I mean. But Haraji, I think that's a wonderful looking chart. And let's go to NAT. This one is for Adrianto. We're having some problems here. And look at this. We talked about, and maybe this is our theme for a day. We like to do one theme each day. We talked about the significance of particular points of supply and only buying greater than first tests of that point of supply. So I think we all agree in terms of how nasty a point of supply can look. That's a really nasty point of supply. Like, look at the candles from here, gap down all the more. And really, this was kind of your first test of that. So if you're looking at candles in here, you're actually not going to go long based upon those candles. You're just going to let it say, look, that's a great looking setup, right? If we tested it 2 or 3 times before that, so up here, up here, up here, I reckon you could buy that. But because we're actually coming into our first test, I just think it's a bit premature to do that. And we're sort of supply still working in the system there. I think got problems here. Look, there's enough signals in here, enough breaks of various points of demand for me to say, on this is my opinion, 0 risk position on this one. So it's not just a 0 RP, it might also be an R.I.P. as well. Okay. Maximum a third just on the basis of that long-term trend. It's not something I'm looking to buy tonight. I'm not going to short it though, because that long-term trend is still up. And then I think GOGL, I'm not sure if that's the one you want. Oh, it is, maybe Golden Ocean. This one looks like a short. I don't know if you're asking for a short. I don't know if you wanted this or Google. But that looks pretty awful to me. And I totally respect it might have incredible fundamentals, Adrianto. I don't know what the fundamentals are. I don't care. I don't know if I've mentioned that to you before. I really couldn't care less. But if you wanted that one, I can't see any redeeming features on that chart. And I totally respect it can go to $11.50 tomorrow and beyond. This might be the absolute low. I don't know. But I can't own it. 0 risk position for me. If you did want this one instead, this is the opposite. This one, I'm holding a full risk position on this. I think this looks really great. So happy to be an owner of Google right now. I wouldn't buy it necessarily that last little candle there, but it's not far off. Next white candle would trigger me to have more risk on this one. And we're going to finish with Tesla today. What a great way to finish off. Very widely held. I love this white candle here, Craig. This is very impressive for me. Look, I'm pretty close. I think you could add a little bit on this, just again in terms of variety of setups. It's not outright my favorite setup today. I think if I had it, I could hold it, certainly. Maybe I'd refrain from buying it. This is a big point of supply. This is a point of supply you don't want to muck around with. And on that basis, I'm just going to go refrain. I think you are at a zero risk position, as tempting as that candle is. And, again, if you think about how the media talks about certain stocks, I think this idea of just saying, look, right now for me, this is how I feel about this. I think that's a really great way of describing what you might or might not do. I'm going to adjourn there. There are a few others, but I am up on my time. I don't want to go too much over time in these. Okay. So let me head back to here and say that we do this. I have a few people asking for Aussie stocks today. We do those on Tuesdays. Please head to www.thinkmarkets.com/au/webinars and register for that. And I will answer all your ASICS questions there. On Thursdays, compulsory session. Remember I said I can't say compulsory because ASIC gets upset. Thursday's a compulsory session, everybody. You have to be there because that's when we talk about the macro, the big picture stuff that at a very high level will have an impact on your portfolio. At a very low level, of course, we're here on Fridays at 1:30 p.m. If you're not a client of ThinkMarkets, well, you should be, because we are the good guys in the Australian broking scene. If you want to trade Aussie shares, I know we talked about US shares today, but we have all the shares you need to trade over here, $8 flat rate trade, Chess sponsored. So they are your shares. You might get a cheaper rate, but they're going to bundle your shares with a bunch of other people's shares in some sort of custodial structure, and you're not the owner of those shares. Very important, especially if you've got a self-managed super fund. Google Man Financial, if you don't believe me. If you want to trade CFDs, long and short, and fractional shares as well, we've got over 4,000 CFDs on FX, indices, commodities, futures, and you can take out a short on the index as a hedge as well. Market-leading spreads, commission-free on those shares. Fractional, how good is that? Long and short and commission-free. There is not a better offering in the universe. Forget the world. No better offering in the universe. Award-winning broker, easy-to-use multi-asset platform, world-class trading apps, dedicated account manager with 24/7 customer support, and a phone number you can actually call us on, www.thinkmarkets.com/au for details. If you're watching on any of the streaming services, make sure you hit the subscribe button to stay notified of my video updates. I do go live a few times a week. It'll let you know when I'm going live or when there's a new update. You can watch video on demand. Please hit the thumbs up button. Very important to let me know you like what I'm doing, so I'll continue to do more of it. And I really do love doing more of it. So I hope you enjoyed today. Hopefully you learnt lots and had some fun along the way. All the best for your trading and investing until we catch up again. Bye-bye for now. Before you run away, don't forget that everything we've discussed today is general in nature. It has not taken into account your personal financial circumstances or particular needs. So before making an investing decision based upon that general advice, you should consider it carefully or seek the help of a financial professional. The rest of the information in that disclaimer is important, and you should read it. Or you can head to the website, download our product disclosure statement or our financial services guide, or give us a call. And don't forget the moat. Very important. Bye-bye.